Have you ever heard the notion it's not what you know, it's who you know? Not in today's world, because if you don't know anything, no one wants to hang out with you. You know, it's like, oh, here's little Johnny, he brings nothing to the table. Let's invite him to the event. No, what you know, we're not in the time of brawn anymore. We're in the time of brains. Second part of the framework to be successful with tax. The second piece is you look at every expense in your life and you ask one simple question. Does this relate to my business? If the answer is yes, guess what? That expense becomes a deduction. This is where I crushed it for Pete. So I'm giving you Pete's strategies right here that got him. I think he's 100% of the way economically independent now, or very close. But the problem is he would have been, but his lifestyle, a luxury once enjoyed becomes a necessity. He was in Park City this week. He was in Aruba recently. So we had him 81% of the way there. I think we got to 100. Now he's back down to like 81% because life is good, right? And his business is doing well. And that's totally cool because I want people to enjoy life. But this was the first thing that we did. Any of you ever host clients, employees, vendors at your own home? Okay, well, there was a senator that had a home in Augusta, Georgia, and there's 14 days of the year where Augusta, Georgia becomes extraordinarily valuable. You may have heard of it. The Masters, yes. So he wanted to be able to rent his place out during that time for like 5 times what it would normally get rented out for, but he didn't want to pay tax, so now we have the Augusta rule. You can rent your home out to your business 14 days a year, write that off for the business, and you don't have to pay tax personally. The days I like to rent out are in Utah, there's the outdoor recreation show. Yep, you can rent it for 3 times as much because you just pull up the Airbnbs or you go to a conference center, ask how much it is, everything's more expensive and it's sold out. Or we had some clients in Cleveland during the Republican National Convention, so they charged 3 times more for the time they hosted a dinner. As a matter of fact, Aaron in the back of the room with the beard and the very strong lad that obviously does too much CrossFit, he came about working with us because he came to one of those dinners where I had hosted some clients and some of our team, but at the same day, we got this huge piece of furniture dropped off, and the movers were like, we can't get that up the stairs, thank you. So it was just in the middle of our house for the function. I said, dude, need some functional fitness, will you come move this? I'll let you stay for dinner. He's like, I love your team, I love your clients, I'd love to work with you. So hell, you get all these extra bonus features while you're writing stuff off, right? So the Augusta rule is a big deal. That was about $75,000 of savings for Pete every year, because he's hosting stuff at the Broadmoor, then he'll just bring his inner circle over to his house, have a little dinner, and all of a sudden you get to write that off. The other thing is, if you have kids that are 18 and under, you can pay them $6,300. Now you have to have a reason to pay them, not that they mowed the lawn, that doesn't really do a whole lot. But there's a $2,500 modeling fee if they show up in your office or on your website. That's union standard. You know, I'm paying my kids $1,000 a month now because I'm writing a children's book, so the 9-year-old's helping me with that. He's my research. The 12-year-old started an e-commerce business because we have so many people in e-commerce that I'm like, I need to know everything about it and see what it's like and go through it. So I'm going through that with him to help him start his first business. So I'm paying them, and I get to write that off. No taxes at $6,300. Their tax rate above that, which is 10%, that's a pretty cool way to turn an expense and turn it into a deduction. So you just have to document. That's the key with this, documentation. I'm not an overly analytical person. I document it on my American Express bill. My CFO prints stuff out, has folders. I mean, it's an amazing, but I've been audited twice in my life, 0 issue, and I'm super aggressive on write-offs. Like, this is my uniform. Because when I'm not on stage, I've adopted the yoga lifestyle. I don't do yoga, but I wear yoga clothes. So I don't write those off, but then I write this off, right? You know, I could tell there's some other folks that do the same thing. You know, my wife doesn't do yoga, but she got tons of Lululemon all over the house, so it's cool. It's just comfortable. She sold me on sweats. Now I'm the dude wearing sweats, you know? So, useless facts for you guys in the middle of the content, but I actually write this off as uniform. So I have a TV studio. We have a multi-platinum artist that he's like, oh, I can't write off my clothes. I'm like, do you do your own videos? He's like, yeah. I'm like, cool, we're just gonna set up a production company. We're gonna buy the clothes for the production company. As a matter of fact, we're buying watches. We're buying anything that shows up in the video through that. And guess what? Now, an expense turns into a tax deduction. Home office, you can write off half your utilities. I just bought a nice espresso machine. I made sure it went into the corner by the office, and that's where I make my espressos. And now all of a sudden I get to write that off. Documentation and story, right? Now, The third thing, we can go through tons of that, but you've got the idea. You want to do an annual meeting in cool locations, that's an expense turned into a deduction as well. You just got to take notes. I just use Evernote. It takes me about 2 seconds at dinner. I go through the notes, and then I just send it off to my attorney. Now it's compliant. Now I can write that off. The third thing is reclassification of income. Reclassification of income. So reclassifying income means we had this guy, Mike, who joined our program back in 2008. He lived in some place in Illinois I'd never heard of. There's no airport there. And he said he loved the program, but he wasn't going to meet with our accountants. And I was like, why not? He's like, well, because I have the best accountant in the world. I'm like, I'm certain that you don't have the best in the world. So certain that I'm a Bears fan, he's a Bears fan. I said that if we don't save you tax, I'll take you to a Bears game. If we do, you take me. And I should have been more specific because he took me to a Jacksonville Bears game, which is not top raft. I couldn't even see the field, you know? I was watching from my phone. And by the way, this is what we did. He was a sole proprietor. If you're a sole proprietor and you're a corporation and you have a company, 400% higher chance of audit by being a sole proprietor. A 100% chance of a higher tax rate because if you're incorporated and you overpay taxes, you have 3 years you can go back and amend your returns. So every 3 years have a different set of eyes on your taxes. In 2006, it was a crazy year because we had a company plane and 2 of my partners died in a plane crash. And I wasn't really myself during that time, and I didn't meet with my team, and I overpaid taxes by $54,000. But fortunately, I have the mechanism that every 3 years we look at it. So in 2008, I got the IRS to write me a check for a change, right? So you can go back and amend those returns. We've had people get $457,000 back, and we had one person get $951 back. I'm like, it's probably not worth it. He goes, if it costs me $950 to do it, I'm doing it. And so we gave him a nice discount, and he got his money back, right? So reclassification of income is setting up the right corporation. If you're in a partnership, an LLC is brilliant. If you're not, it might not be the most effective thing because when you tax as a partnership, that's useful for you. When you don't, not as useful. If you're the only person in the business, an S-Corp's great because you can differentiate your income by taking salary of what you would hire someone else to do your job and take everything else in distributions when you work on your business. And by the way, distributions, avoid the 15.3% self-employment tax. Even when that's capped out, you still save 3.2% on Medicare and Medicaid. Even when you get above $250,000, you save another 3.7% on the success tax that's added in there. So this is money in your pocket simply by taking your income differently. Anyone own a commercial building in the room? If you own a commercial building, you should be the meanest landlord in the world to yourself and charge the highest possible amount that you could justify because that comes in as a more passive-based income, which is taxed a lot less than income that's active, right? Or there's tons of ways you can move ordinary income into capital gains income, and I shared that with another thing. Now, maybe in your businesses, you even create like businesses that branch off from your business, or like we have a lot of people that are in the health space and they do supplements. We have them set up their supplement business when it's starting in a C corporation because your first $50,000 in a C corporation is taxed lower than individually, an LLC, or an S corp. It's taxed higher after that, but it's less at the $50,000 and below, so we can set that up as an incubator company and then move it back into the major organization when it gets above $50,000. And our average savings on tax for every $250,000 someone makes is $11,430. By the way, that's bottom line spendable cash. That doesn't require revenue that you pay employees and all that kind of stuff. And I've even talked about if you own a building, you should cost segregate. I mean, I could talk about tax for hours and hours and hours, and then you guys would get eventually really, really bored of me and tired of that. So is there some things you can put into action with what I just covered? Yes. Would it be useful if I kind of gave you a way to implement this more than just what I talked about today? Yes. Okay. So this will be a little bit unique because I'm going to pass out these forms. And right when I pass them out, I just want you to cross out the 2088 that it says on here because I don't want that to distract you from getting value because people are in different places here. Some are just leaving the corporate gig and starting their business. Some are already really successful in it. So because everybody's at a different level, I actually want to apply the equation of my life of exactly how I see the world when it comes to money and finance. So anyone in the room want more financial capital? Just a quick show of hands. If you didn't raise your hand, you don't get, no, then you don't get this, all right? So, financial capital is a byproduct. In the world of cause and effect, value creation is at the cause and dollars are the effect. So financial capital is like the receipt at the grocery store. It's evidence It's not the actual meat and potatoes. The meat and potatoes comes in two forms. The first one is mental capital. Mental capital is knowledge, ideas, concepts, systems, tools. Have you ever heard the notion it's not what you know, it's who you know? Not in today's world, because if you don't know anything, no one wants to hang out with you. You know, it's like, oh, here's little Johnny, he brings nothing to the table. Let's invite him to the event. No, what you know, we're not in the time of brawn anymore. We're in the time of brains. There's kids that my kids watch on YouTube that are multimillionaires because of the advent of the internet and of technology, you know? Yes, in the past it might be which family you were born into, and if you're part of the Lucky Sperm Club, then great, you're fine, you know? But now, there's so much more opportunity for everyone. It comes down to mental capital. What you know matters. And in the financial world, part of the reason I was able to go to Italy, part of the reason I'm now entrusted with kind of this family legacy for my family, isn't just because of, not just because of I made the leap and did the business. That's why my grandfather was so worried. But because I actually went out and did what the Rockefellers did. The Rockefellers, they built a financial team. They're now 6 generations strong. 6 generations. They donated $50 million to charity so far this year, and they're on their 6th generation. The Vanderbilt family, though, had more money than the U.S. Treasury and destroyed it within 54 years of Cornelius' death. They didn't have the right mental capital. How was the money made? I don't want to screw my kids up into being entitled brats. I want to make sure that they can really appreciate where we've come from and what's possible, and it comes down to 3 families. One is the family office. If you know in your business how important a good team is. What about in your financial life? I see too much leaking and lost money because fractions of their team are missing, not communicating, or completely not coordinated. That is a huge part. The second family is family retreats. Treat your family like a business from a standpoint of you have meetings in your business, you research stuff in your business, you have symbols for your business like logos, you have taglines. What about having that for your family so you pass on traditions and rituals and also your philosophies, not just your money? Money with no philosophy is a surefire way to destruction. Right? And the third family is a family constitution.